one of my favorite metrics from my days on the public side is price to book value. So you look at a company's balance sheet and you look at the equity value that they have, and then you look at what the public markets are, pricing that equity. And so, if you kind of roll back some of these players like Sunrun and, Hannon Armstrong, Brookfield Renewables, I think there was a lot of excitement, 2-3 years ago around what these companies were doing and the amount of capital it was going to need to get deployed into these sectors. And so the price to book, really, was kind of took off. And so if you just map out price to book over the last 10 years, I think Hannon Armstrong peaked at like a 4x, price to book. And now it's come back kind of closer to kind of 1x or 1-2x. And so, right now the capital markets, the public equity markets are certainly signaling to these players that, there's a lot of overhang, that there isn't, basically the franchise value, which is the spread between kind of book value or 1x book value and anything above that. Like there's not a huge amount of value that's being ascribed to the franchise value of these platforms that are being built. I think if you look at other parts of our economy, what's really interesting is if you look at a lot of these like electrical equipment providers. So if you look at like a Trane, which is doing a lot of HVAC equipment, if you look at an Eaton, some of these players, like, and you map out that price to book, like you see the opposite. You actually see, Trane now is at a 10x price to book, and a decade ago it was 2x. And so you basically, and if you look at Quanta Services, a $45 billion company that's an infrastructure company, they're mostly equipment people. Like traditional valuation metrics on the public side would say, well, maybe that's worth a little bit more than 1x book. Maybe it's 2x the franchise value. Well, that's trading close to 6x.